here. Metin should be here in a minute. Hi, Mark. Hi, Stephen. Yeah? Thumbs up. And you, everyone who's tuning in, be sure to add questions, comments as well that you may have for the startups. If we've got time and if they're solid questions, we'll put them in front of the companies and see about getting those answered. And if you want to pitch on a future session of the Startup Tank, we'll be doing this every other month with awesome investor panelists like Aaron and Metin, whenever Metin gets here. He's apparently not as German as he should be today. And then you will have a chance potentially to pitch. To do so, go to the online events and you can find the upcoming session, leave a comment there, make sure your profiles are filled out. And if you fit the bill, we'll give you a slot for our upcoming session. Now that's been more than enough from me, I think. Let's hand things over to Aaron, who was tapped on the shoulder by Joe from a scheduling challenge with Volo Earth Ventures. Aaron, do you want to give a bit of an overview of yourself, Volo, what you guys focus on and invest in?
Yeah, absolutely. Thanks, Matt. Great to be here today. Looking forward to hearing all of the pitches. Like Matt said, my name is Erin Curtin, and I'm here with Volo Earth Ventures. We're an early stage fund investing in what we call the new energy economy. Practically, you can think of that as pre-seed to Series A investments across 4 main verticals: energy, buildings, industry, and mobility. But we come with the lens of new energy economy because everyone on our team has a background from somewhere across the energy and electrification sectors. So really excited to delve in and hear some pitches today.
And then we have Metin, but I'm trying to see if Metin's here. He gave me a thumbs up, but he's not here yet. So while we're waiting for him, we'll give it another 2 or 3 minutes. If this is your first time, if this is your first Forward event, Forward, we're trying to connect the startups, corporates, governments, investors, the researchers, the ecosystem players, the hustlers and doers who are focused on climate sustainability, clean tech, energy, sustainable food, urban industrialization, carbon capture, the people who are fighting for mitigating and pushing back and adapting towards climate change, i.e. you guys. We help connect you guys to the tools, the resources, the funding, the support, the clients that help move your vision and the world forward. To do that, reach out to at least 3 to 5 members every week so that you can connect to folks who could be helpful for you, and you might just be helpful for them. And maybe you can move the world forward. Think about Forward like a meetup and less like a LinkedIn. LinkedIn, when someone reaches out to you, it's basically a spammer trying to sell you IT services from wherever in the world. Here, everyone's here to focus on climate, sustainability, energy, clean tech. And if someone reaches out to you, generally speaking, they're going to be helpful. You're going to be appreciative, and likewise, reciprocate, find other members, reach out. And with that, we have our upcoming Climate Connect call next week. I think it's the 28th. That's one of the best ways to meet other members in the space. We've got calls for energy and electrification, carbon capture and climate finance, sustainable food and agriculture, marine, water, and blue economy. Hop in there and find other great members to connect with, have discussions, and hopefully make something happen in your work. Metin is still not here, so we are going to have to kick things off with the first company of tonight. Everyone, if you're new, if you're just getting in, companies will have 5 minutes to pitch, followed by about 5-ish minutes of investor questions and follow-up. And then at the end of the night, we'll choose the startup of the night, and they'll be crowned and win all the guts and glory for all eternity, yada, yada, et cetera, et cetera. Does that sound good, folks?
That sounds good.
Awesome. Then, Stephen, Analytics, do you want to pop up your presentation and go first?
Yeah, sure. No worries. Give me one moment. Can you see my slides?
Looking good.
Looks
All right. Let me know when to start.
You are good to go. Your 5 minutes starts now.
Great. So my name is Stephen Unfiltered. I'm the founder and CEO of EkoHaul, and we're looking to eliminate unnecessary idling in long-haul trucks. So basically, trucks idle their engines and use auxiliary power units around the world. I'll get into why later, but basically they burn fuel while they're not moving. Up to 20 billion liters wasted every year across the world, which emits 60 million metric tons of CO2 needlessly, and it costs billions in fuel that could be avoided. So in the US, the reason for this is that trucks' batteries do not have enough capacity and power to actually power the auxiliary systems when the truck isn't turned on. So in the US, the most common habit is that we just idle the engines all night when the driver is resting in the cabin in order to power the heating, the cooling, and other electronics. Europe uses dedicated diesel generators, so their fuel spend is less. It's still an issue, but they also have a lot more congestion than is common in the US when crossing borders and things of that nature. So what we're doing is we're replacing that fuel spend with solar power. So we put an array on top of the trailer, hang a high capacity battery off its nose, and we provide power for anywhere from 2 to 3 nights worth of that auxiliary power load for the cabin based on a single charge. My background, I've been working in logistics and IT for the last 20 years or so. I also worked at a Silicon Valley hardware startup for a couple of years. Our CTO worked at a variety of startups as well as Echoz, which is a major trucking manufacturer. She was responsible for ramping up battery production in-house. She has a PhD in electrical engineering with a specialization in EV battery chemistry. And we're also in the market for a head of sales or COO. We've got a couple of advisors. Robert's companies basically provide hardware and software for vehicle telemetry systems. Lucas has worked at places like Ford, Waymo, and Tesla on vehicle electronics and wire harness architecture, AI and telemetry, and things like that. I actually met my advisors at the University of Michigan, where we were both on the solar powered car team. So we know a thing or two about solar. We raced across both North America and Australia. We also know a thing or two about scaling. Robert's technology is in over 250,000 semi-trucks in North America, and Lucas helped ramp Model 3 production at Tesla. So between us, we've got several decades of logistics and vehicle technology experience. So we understand how fleet operators think and a lot of their business pressures. Speaking of those business pressures, why now? Everybody's aware of what's happening in the Strait of Hormuz. So oil prices are slowly and steadily creeping upwards around the world. Fuel in all logistics is about 1/3 of your OPEX, roughly, second only to driver wages. And driver wages are also non-trivial because there's massive turnover and shortages on key routes in both the US and Europe. Our business model, we're looking to sell our solution directly to fleet owner operators or captive fleets, companies like Pepsi, Walmart, things like that own their own trucks. Since it's only 5 minutes, I'm not going to go massively into detail on this. Just know that there's a couple different kind of returns based on whether you buy the product or whether you lease it. We definitely want to move towards a leasing model very quickly as soon as we have enough scale, because then we don't own the capital assets, and they get our customers get ROI from day one. The TAM, typical large. If we can deploy 2,000 units within 5 years, we're looking at a 50 million SOM. I won't go into too much in the go-to-market. There's competition in the market. I can go into the reasons why we're different, but basically we're targeting an area that nobody else is covering except for these diesel and electric APUs.
And time
We've got a sign. Okay. Thank you.
And Metin said he's coming. Apparently there was a bit of a scheduling challenge. Can you unshare your screen, Stephen, so whoever's talking could be up? And I will play investor panelist as well, given that Forward started as a syndicate investor model and possible fund. But Aaron, I would like to let you go first. Do you have any questions from your side in terms of what you've seen so far? What's interesting, what's not? What do you want to know?
Yeah, thanks, Matt. And thanks, Stephen. Great pitch. Would love to learn, this is obviously a fairly fragmented market. Would love to learn more about your go-to-market strategy and how you are going to get those big customers that can enable scale here.
Yeah, thanks, Aaron. It is very fragmented. That's also one of the reasons I know in Silicon Valley, it's a big thing that founder-led sales, but I really want to get somebody on board to kind of separate the wheat from the chaff, because it's a very long tail industry and not everybody is very, let's say, technology forward. So the first things, of course, with any hardware is we want pilot customers. So I'm targeting people that do long haul, small enough companies where they are either owned by the person that founded the company so they can make decisions quickly, get the technology out there, get it validated, and then use that to kind of roll into larger and larger fleet deployments. If that's successful and we're able to scale, obviously, one of the things I really want to push towards in the future is to get customers to actually be asking their logistics providers for this, because customers, like, if you think of the word IKEA as the Walmarts of the world, they're actually under quite a bit of pressure globally to reduce their scope 3 emissions, and they have precious few levers that they can pull. So this is one area where if they're able to say to the trucking company, listen, we'd love to, benefit from those scope 3 reductions, use this technology. And there's a few examples already being done around biofuel. So there's a couple of companies in the Netherlands that actually like sell their logistics customer the carbon credits that they earn from using things like biofuels. So there's precedent in the market conceptually for this, but where we want to end up is basically having people asking us to talk to their logistics partners. And that's also why one of the things we're targeting earlier on is captive fleets. So a company like PepsiCo that has its own trucking fleet, if you look at like the adopters of EV trucks in the US, it's all captive fleets. Like none of the major JB Hunt's, none of them are doing it, because for a captive fleet, their logistics is 100% pure cost, and anything they can do to reduce that, they're keen on. So I'm slowly making progress on targeting those types of fleets in the US.
No, that makes a lot of sense. And for the captive fleets, I imagine this is much more useful for longer haul routes rather than short haul routes.
It's only really for long haul. If you're not idling, if you're not overnighting somewhere, it's marginal benefit. We can size the battery differently. So one of the companies that tried doing this a few years ago, they were listed on the NASDAQ, they IPO'd, they went bankrupt, whatever it was called, Sono Solar, well, it was Sono Motors then. And in very quick terms, they just tried to boil the ocean. They were like, we're going to put solar on everything. So I don't want to get ahead of my skis here. I want to target long haul, overnight. That's it for the beginning, right? But there are many, many more opportunities for depot electrification where, imagine school buses, just as an example. You've got a lot of trailers, school buses sitting in a depot all summer doing nothing. If you electrify that, or if you do a trucking company, they run 2 to 3 trailers per tractor. So there's a lot of trailers sitting in depots. They could be generating electricity for them and powering some of the shorter haul vehicles as well. Again, I don't want to get ahead of my skis. I think that's a longer term market opportunity. There's a lot more ancillary benefit. And our system is agnostic in the sense that you can put it on an electric truck and it will similarly reduce the load on the traction battery, just as it will reduce the load from the heating and HVAC systems for the diesel powered one. So it's agnostic in terms of the electrification. I think there's a lot of opportunities to help it get electrification adopted more quickly and more broadly in the market. But again, I want to focus, I'm a big fan of you do a wedge, you do it well, and then you expand rather than trying to do everything and then funnel down. I don't think that works especially for hardware.
Yeah, absolutely agree. I think that makes a lot of sense. How large do you think is the captive market when you take out folks that just do short haul routes and return back to a depot?
So the US, you're looking at anywhere. The numbers are really sketchy because obviously trucks can flex, right? So they can do a long haul route one day and then do a short haul route, whatever. My dad used to do over the road for JB Hunt for a while and things. So I'm quite well versed in this, but it's around 1.3 million trucks in Europe and around 1.5 to 1.6 million in the US. So they have dedicated sleeper cabs in the US. So you're pretty much going to just use that for long haul. And then if you do the maths, like I did for the TAM and things like that, you can figure out exactly how much fuel could be saved and therefore how much we could charge and what percent of that market we can capture. But yeah, it's around let's say 1.5 million long haul trucks in the US.
And how do those numbers change? And what does your market forecast look like as they almost all get automated away for long haul trucking? So I think that's one of the first areas in terms of where self-driving will probably eat away the market. How does that affect the build out for the fleets you're build in terms of, is that a positive of suddenly there's the need to replace trucks anyways? Is that a negative in terms of the actual spacing for the sleeper beds, et cetera?
So I'm very not bullish on trucking automation. I think it's relatively low-hanging fruit for the long haul segment because you're on the highway for most of it, but it's just like airplanes, right? Like it's the loading and the unloading of the truck where it becomes necessary to still have that human. So I'm not sure how quickly that's going to be fully automated, but in that scenario, most of the trucks that are going to be automated are going to be electric anyway. So you would actually reap the benefits of, basically preserving or extending the range of the traction battery. And I've already talked to a couple people in the industry who are saying that, when I say the industry is technologically not forward, if you take the design of a typical truck and you swap out an EV battery and then you're like, okay, well, here's the range. The problem is that the air resistance has a much higher impact on that traction battery than it has on the diesel engine because of the energy density and things like that. So you can imagine these trucks run a very precise route of like, I'm going to stop at this particular stop. It's going to take me this many hours and then I rest. So if you miss your time stop because it was windier than expected, like that is not going to fly, right? So preserving that traction battery and extending the range, even if it's automated for EV trucks, I think is quite a use case. We wouldn't necessarily need as large of a battery because if you're not overnighting, then you're using the power as you're kind of driving. So we'd have to look into that. But right now I'm really targeting, look, the long and the short of it is, if right now EV truck sales are like 1 or 2%, right? Automation is basically still being R&D'd. Those trucks that are purchased today have a 15 to 20 year lifespan minimum, like the tractor, and then the trailer has another 15 to 20 years, so they're roughly the same. So there's still going to be a window of a rolling wave of people that, you know, they haven't adopted the latest technologies, but there's still an opportunity to reduce the emissions and the costs with those existing technologies as electrification gets rolled out. So I wouldn't expect a whole fleet, like all the trucks, even in a place like Europe, to be electrified, automated, whatever, for 30 to 50 years based on current sales figures and things like that. So there's still quite a massive market of reduced emissions today. And it's, for me, it's really a crucial stopgap between, the range anxieties, the emissions pressures and things like that between the current ICE model of trucking and the future EV / more automated solution. I hope that answered your question. I know I waxed a little bit lyrical on that, but it's not something I've really, as I said, I'm very, very hawkish on, or I'm very bearish on the automation side for trucking. I'm very bearish on the automation side for driving in general. I used to get into massive discussions with Lucas about this because he led the team that designed what they call the Octopus, the thing that sits on top of those E-Pace Jaguars that go around San Francisco. We got into many, many very long discussions about. Ironically, he's a vision-only guy now, even though he set up the LiDAR and the radar sensors, which, anyway, that's a discussion for another time.
Aaron, you looked like you wanted to add something.
Do we have time for more questions or yes? Okay. Simon, would love to go back to something you said earlier about having different batteries depending on the class of truck, I think, and the customer.
Yep, correct.
How many products are you planning to build and how much customization is required for each customer set?
So solar panels and batteries are basically, I used to work in commodities, so they're not technically a commodity, but they're very close. So sizing the battery pack is as simple as telling the provider, give me this many cells. Like in terms of customization, it's very, very low. But yeah, so for instance, if we expand and we're able to scale and whatever, and then we do things like delivery trucks, right? So like the things that are running around, going back and forth for the last mile and the delivery and returning to the depot, the battery I'm sizing weighs 200 kilograms. It's not suitable for that type of thing. So maybe there's no battery, maybe there's just a small battery. It would depend on the fleet, what their usage profile looks like, what they're trying to accomplish, and then we can size it. But in terms of customization, one of the benefits from my perspective, not always for European investors because they're very heavy into IP, all of the components are, ready and existing in the world. It's just recombining them in a different way. The panels are on RVs and boats, around the world. The batteries are on some trucks already to replace the starter battery so they can deal with the vibration, the weather conditions and things like that. So we're just sizing and recombining existing components for a new kind of use case. But in terms of the customizability, ordering, the US and EU have different size trailers. So 34 to 36 panels fit of the supplier that we've got quotes from would fit on an EU trailer. We'd have 44 panels on a US trailer. In terms of customization, it's just a PO. There's nothing special about the technology in that sense. So in the future, we definitely want to start looking into, there's some IP potentially around things like our energy management system. And one thing this is slightly technical, but if you're interested, the way that people attach the solar panels today, it's very kind of like, this is always how we do it. We did it on solar car, all the competitors, they just glue it on and that's it. If I'm a trucking company, the industry operates on 2 to 8% margin, up and down depending on region. I don't look at my capital expenditure and go, oh, it's worth it, it's not worth it. I look at the long-term maintenance. And if you glue solar panels to a trailer, what you're telling me is every time something happens and I need to replace a panel, the way that if you use proper bonding adhesives, it takes anywhere from 24 to 48 hours to cure. It needs to be temperature and humidity controlled. If I'm removing a trailer from circulation for 2 to 3 days because something happened to the panel, yes, they've got guarantees or whatever, then I'm concerned much more about the maintenance costs. So one of my ideas that I need to test once I get a test bed out there is to basically just bolt on the solution, like put the panels onto an aluminum backing, bolt those panels like as a cassette basically on the trailer. That makes maintenance super easy. You just unbolt it, rebolt on whatever panel you need to replace. You also have a small, few millimeter air gap underneath that helps with cooling the panels and helping them operate optimally. So yeah, there's options for future customization. Right now, to get out the door and get started, we're focused on just take things that are off the shelf that already work. Like for the initial demo unit, let's say, or prototype, pilot, whatever you want to call it, you don't even need energy management control. Like trucks are dirt simple. They're a lot like planes. You order the shell and then you fill it with, I want these seats, I want whatever. So the wiring is dead simple. It's nothing like a consumer car. If you have 2 batteries, so we put our system onto a truck. If the truck has 2 power sources to look at, it just goes, well, which one has higher voltage? I pull from there. That's it. So at least for an initial demo unit, whatever, it's bog standard kind of stuff. Obviously, that's not going to be how we manage, and we do things with telemetry. We do things with the energy and battery management over time. We do battery health, temperature, things like that. But to get off the ground and get it out there and prove that it works, I mean, there's some competitors already doing it. So in that sense, it's proven that it can be done. But we're not looking at any kind of heavy customization from day one. And I've already got supplier quotes from the battery providers, the solar panel providers. I've actually got multiple potential sourcing options as well. We're also going to try, having come from logistics, the batteries and solar panels are coming from China. I'm looking at locally produced batteries in Europe and the US and locally sourced components for things like, bolting it on, doing the wiring, things like that to try and shorten supply chains as much as possible where we operate.
Awesome. Then thanks for the time and thanks for sharing, Stephen.
Yeah, thanks a lot.
And then we would move on to our next session with get ready, Michael, with Alligator. Before we do, we had a scheduling complication on our side. I will take credit for screwing things up because of the miscommunication. And now we have Metin Zerman is here as well with Energie 360, a local CVC here in Zurich. Can you give us the spiel, Metin? What does Energie 360 focus on?
Hi, sorry for being late. I had some issues on my calendar. Energie 360 is a utility based in Zurich, and we have our own corporate venture capital fund investing in early stage companies, mainly in the seed stage, geographically in Europe. And when we invest from 250,000 up to 2 million Swiss francs in companies. And our main focus are energy transition topics because, as you probably know, utilities have to transform from fossil-based business model to renewable and decentralized business model. And so we're looking into technologies that can help us to do that together with the startups. We provide not only the liquidity and cash, but also access to the market, access to our experts, and also we're operating this corporate venture capital fund now for 11 years, quite a long time now. Have a great companies in the portfolio and still looking into new companies. So thank you for being here, having me here. Thank you.
And thanks for coming. Sorry about the mix-up. Now we have Alligator. Michael, do you want to take things away? And I'll give you a 30-second warning before your time runs out. Sound good? You're muted, Michael, in case you're talking. One sec. Michael's having some technical difficulties. And how about we throw an audible and go with Regen? Ishan, do you want to go next?
Yep, I'm here. Just a second.
Oh, your mic up is ready. You got a professional setup.
Yeah, sure have. Just a second. Okay. How's that looking?
Looking good. Take it away for the battery boom.
Okay. Hi, everyone. Ishan Dan, founder and CEO of RegenX, and we're an investment platform for battery energy storage systems. Now, you may have heard the world is going through a significant battery investment boom. I'm located in Australia, and our battery storage capacity was up 233% last year to 4 gigawatts. We were aiming to hit 19 gigawatts by 2030. That makes Australia the third largest battery storage capacity in the world. So it's not hard to see the investment opportunity here roughly is $50 billion that will be needed to be deployed into battery infrastructure in Australia by 2030. That's 4 years away. Meeting this demand requires private capital. But of course, there is one huge bottleneck. How do you invest in a big battery? It's not easy. The traditional financial systems, such as project finance, make it very hard for private investors to access these projects. They're outdated, fragmented, and much of it is still done using Excel spreadsheets. Projects can spend months moving through settlement, administration, and reconciliation before the money even reaches the project. Some projects never even get funded. It's a fragmented and manual system that was built for institutions, not private capital. To solve this, RegenX has built an AI-powered investment platform that replaces fragmented spreadsheets, manual workflows, and outdated systems with a single system that manages the entire investment lifecycle. RegenX is purpose-built for battery energy storage system projects and the types of revenue that these best projects generate. We make best battery projects investable, and we then connect developers with private investors. Let's look at a real example. This is our Dairy Park battery energy storage system pilot, and we're looking to raise $150,000 for that project. Under the current process, capital passes through more than 10 separate systems before it even reaches the project. You can see there, 1 to 10. Administration and reconciliation remain highly manual. Settlement can take well over 6 months. For a market that's growing as quickly as it is, this is a real problem. RegenX replaces these fragmented legacy systems with a single AI-powered investment platform. Instead of having multiple disconnected systems, our platform creates a single source of truth that everyone can rely on. Developers, investors, and administrators all work from the same transparent record of ownership and transactions, reducing administration, eliminating reconciliation between systems, and enabling capital to move more efficiently. One platform, one source of truth. So what's our competitive advantage? Unlike traditional capital raising platforms, RegenX removes some of the high investment barriers through our digital platform. We simplify and accelerate and broaden access to private capital. How do we make money? We generate revenue across the entire investment lifecycle. Firstly, through our AI-powered investment readiness assessments, we charge a once-off $2,000 to $5,000 fee. We then charge a 3% success fee based on the total amount of capital raised, and then we also charge an ongoing platform administration fee. Our traction, we've already achieved significant traction. Our platform is built and operational. We've secured $130,000 in early stage funding. We are onboarding our first pilot battery project at the moment, and we've established strategic partnerships with developers, family offices, and industry partners. Our team is the combination of expertise across capital markets and finance, clean energy, technology, and business development. To wrap it up, the world needs a better way to fund this clean energy transition, and that's what we're building at RegenX. We're pre-seed raising $500,000 to fund our project rollout, and we're looking for investors and strategic partners who can help us build the future of infrastructure investing. Thank you.
Well played. You kept it within time. Very good. Very good. Erin, do you want to go first? Questions?
Yeah, sure. Happy to kick it off. Thanks, Ishan. My background is actually from a utility scale energy storage developer. So really excited to see this has lived some of the challenges firsthand. Maybe to kick it off, would love to understand why the platform is focused on BESS in particular, and how you think about market size given the focus on BESS in particular and not expanded to broader renewable or even just energy assets.
Yeah, so BESS battery projects are the big investment boom that's happening in Australia, China, USA, India. At the moment, we've got obviously an oversupply of solar energy. And the problem here, to stabilize the grid and to actually be able to store that energy, and also with the massive amount of data centers that have been scheduled to be built, we've got clean energy developers that have a pipeline of battery projects that need built. The problem is, I'm targeting battery projects that are from about the 1 million to 5 million mark. They're rather small. They're in the small to mid scale. They find it really hard to get project finance. And that's why I've come in with an equity solution to solve that problem. They're too small for big bank project finance. The second thing is the way that they generate revenue is through arbitrage trading, and that's really popular. It's very profitable. Buying when prices are negative and then selling at peak electricity prices, earning a massive double-digit return. No project finance or financial institution will lend against volatile market revenue. They require contracted revenue. So that's a real opportunity in Australia. So I've managed to develop I've looked at their complex modeling spreadsheets, and I've sort of fed that into AI, and I've worked out and I've used past data to be able to model different battery sizes and the arbitrage revenue that can be generated. Some of these batteries can generate up to 18% IRR per year. So it's a profitable area. Does that answer the question?
Yeah, no, answers the question. I think market size perhaps is still a question. Absolutely understanding the focus on smaller scale, systems that don't have access, or smaller scale developers that don't have access to finance there makes sense. Agree with the arbitrage focus. But maybe if you could talk a little bit more about how large your market size is there.
Yeah. So the serviceable obtainable market that I'm looking at the moment, we're looking at projects that are around, well, at the moment, the first project only $150,000. It's a small battery, but anything from that up to 5 million, we're looking at a serviceable obtainable market. I've got a pipeline of $60 million worth of projects. So they're obtainable. The first year we're looking at 3 projects, and after that, obtainable market of about within 3 years of about 120 million. In Australia, the market is about $50 billion worth to reach that 2030 target of 19 gigawatts. So there is an endless supply of batteries in Australia, and I haven't even taken into account China or USA or Singapore. This is just in Australia. If you go on a global front, the number is absolutely astronomical. But in Australia itself, you're looking at over 50 billion.
Metin, I see you have your hand raised. Don't want to monopolize the questions here.
Yeah, thank you very much, Sean. It's a great pitch. Actually, I had the same question, but maybe just an additional question. Maybe I did not get that. Do you own the assets, or you just finance it?
So it's equity. So the way it works, it's an equity investment. So we place the project in a special purpose vehicle. The investors buy units of that special purpose vehicle. Now, this is what's really funny. As a developer, you can choose whether you want to have ownership of that battery after 10 years. Then after 10 years, that battery project then transfers into the developer's ownership, depending on how the investment's structured. Or if the developer doesn't want ownership of the battery, if it's a big battery, $5 million, then investors can have 40% ownership of that battery forever, until the battery for 25 years, and they'll just collect the yield year after year.
Got it. But maybe rephrase my question. You're not operating the battery, is that right?
No, we're not. No way. All we're doing is we're only the investors have ownership of the actual battery, but the actual we have a couple of there'll be Upsol is one of the clean energy developers. They operate the battery. the servicing is paid from the special purpose vehicle, but at no point do we ever get involved in the actual
Okay.
operating of the battery. Yeah, no.
Okay. Thank you.
Maybe that comes back to the question around, because the primary revenue stream is going to be arbitrage, which obviously requires a adept operations to understand optimal times to charge and discharge. What sort of guarantees do investors have on revenues or lack thereof? And how do you convey that to customer sets that it sounds like targeting investors that don't have as much experience in energy markets? How are you communicating and getting them comfortable?
Yeah, so the thing is, a lot of private investors have but a lot of them are willing to learn and understand how, how these energy batteries work. So it's a bit of education on one part. The second part is, getting back to your question, we have a target internal rate of return, IRR, of 10% minimum. So what that means is, let's take a battery that the first one we're piloting is $150,000 capital raising, as I showed before. We're targeting a 10% IRR. So that translates to a annual revenue of around $20,000 to $25,000 that we need to generate from that battery. What happens is, if, for argument's sake, for 1 year that battery only generates 15,000, then the developer makes up the remainder. So it has to come to, that's one investment package where it's a 10% target IRR. Then there's another package where there is no target. Whatever the percentage that an investor holds of that battery is returned. So if 1 month the arbitrage revenue is 0, then the investor doesn't receive anything. The next month, if the arbitrage revenue is 10,000 and the investor holds a 80% return on that, then they'll receive 80% of that arbitrage, and that's how it works. Does that make sense?
Yeah, that makes sense. Can you talk through your ICP on both the developer side and on the financier side? Who are the core folks that you would hope to work with as your beachheads?
Yeah, sure. So because I didn't actually speak about my background, I was a stockbroker and wealth manager for 15 to 20 years. And I was the head of sales at a wealth management platform. So on one side of the market is the demand side. The demand side are, we call them wholesale sophisticated investors. Overseas, you call them accredited investors. So our platform, number one, the demand side comes from accredited high net worth investors. Number two, wealth managers. Number three, family offices. They are the three. And then on the other side of the platform, which we have pretty much solved, there will be we have clean energy developers that have already a pipeline of projects that are ready to fund, ready to go. So we don't get involved in the pre-feasibility of, we don't even actually meet any of the projects that come on the platform. We use clean energy developers that have vetted the projects already, and they just need to be funded. And that's a constant pipeline from about 5 to 6 different clean energy developers in Australia. So the supply side is sorted. It's the demand side that's the difficult part.
And are you performing diligence on those clean energy developers to verify that they have the capabilities needed to build and operate a project?
Yeah, so we've got a third party that we use, and number one, so there's different levels of due diligence. Number one, we have to do due diligence on the actual clean energy developer to make sure that the projects that they're putting on the platform are legit. Number two, when a project comes onto the platform, they have to submit documentation that shows, like a pre-feasibility study. Maybe they might have grid data, they may have pricing data, they may have, their financials that they'll come on and they'll submit. And then that's the second point. And we will have a third party as well once the project, because once a battery project is operational, we have to have a third party that looks at the data that comes off the battery to make sure that data is the actual real number that's coming off the battery and that isn't fabricated. So then we know how much the actual data is real and live. So that's the other third party that we use as well to make sure that that's done too. So there are a few levels of due diligence that we use. We also have a financial side because we're a regulated financial security financial platform. So we have to make sure KYC, AML. We check. Everyone that comes on the platform has to pass certain regulatory hurdles. I'm sure that's the same in every country that we operate in. So yeah.
Awesome. Well, thank you for presenting. Any last questions, Aaron or Metin? I think you guys nailed it enough not to need extra questions from me.
Cool. Thank you, guys.
Awesome. Michael, is your microphone and screen sharing working? You want to go next with Alligator?
Probably still mute.
It looks like he's still mute. Then with the other Michael, I can go next with Resordinate.
Happy to go next. Can Ishan stop sharing and then I can share my screen? Cool. Thanks, Ishan. Okay. Everyone seen that?
Your 5 minutes starts now.
Cool. Hi, everyone. My name is Mike, and I'm the founder and chief exec of Resordinate, and we're turning the world's commercial and industrial waste into a resource. Essentially doing that by creating the global reference data infrastructure that can ultimately drive much greater recovery of those materials. So if you think about the industrial and the sort of commercial system, more than 90% of the world's waste is being generated within that system. So it's not so much in the sort of municipal side or the household side, but it's that kind of hardcore kind of commerce and industry. And of course, that material could be viewed as a secondary raw material, not just as a waste. So there are huge opportunities to recover and generate value from all of that material. But the problem is those supply chains are really sort of complex. The data is inconsistent and often missing, and there are sort of many thousands of different players responsible for collecting, moving, and processing that material. So there's a kind of real lack of transparency and a real lack of consistency through that supply chain. So what we're doing is we're building a kind of verified, normalized audit-grade data on this global flow of secondary raw materials. So how do we do that? Well, we essentially normalize all the data that's been generated by all those entities using a kind of materials taxonomy that we've developed over the last few years. And then what we're then doing is verifying what happens to that material. So we've built a global registry of waste and recycling infrastructure. So we're understanding what happens at these locations to which material is being taken, so we can kind of start to verify and identify what's happening and where that material goes. And essentially that is creating value for sustainability, procurement, and finance teams. So our proposition, our route to that nirvana, if you like, is called Waste Map, and it's a dynamic, platform-agnostic pipeline of data on the waste and recyclable material and reusable assets that are flowing across a single enterprise, large, complex enterprise, or even a single geography. And so what we're doing there is we're pulling data in from across all of the entities that are collecting and moving and processing material on behalf of this complex entity. We're normalizing that data, we're validating through the global registry, and then we're generating this value for the customers, the environmental compliance teams, sustainability teams, supply chain teams, and finance teams. So what they can then do is they can optimize their kind of material budgets, they can identify efficiencies and cost reductions. Equally, they can mitigate risks in those supply chains, and also then they can validate their targets, public targets and reporting. But each customer gains comparative context that their own internal data cannot provide. So the team is, we've got a whole mix of people from who've worked in and operated waste and recycling contracts, data science, software development, and my own background in environmental management and sustainability over the last kind of 30 years. And then we've got a network of waste data specialists spread around the world in terms of actually collecting some of this data at source. So we've been going since 2024. I've got some initial kind of customer traction with Marriott, and we're working with them globally to sort of build a kind of single kind of platform agnostic view of what's happening to all of their operational waste across their sites globally. And then also working with Anglo American mining company, looking at large complex sites in South Africa and the UK. Again, validating their sort of reporting and the sort of corporate kind of goals, but equally identifying kind of resource and efficiency and cost recovery opportunities. So our market, we're operating in the supply chain, traceability, materials market. But what we're doing is we're looking at what companies are saying publicly about waste and as a material issue. And we're really drilling into those companies where they've identified particular challenges with that data. So our customers will be those kind of sustainability reporting supply chain teams within sectors like hospitality, transport, natural resources. So our competitors cut across kind of specialist consultants, ESG software vendors, kind of waste management software, but none of them are kind of looking at this material as across all of the kind of vendors that are kind of servicing our customer sites. So we have a one-off kind of health check, kind of low price health check. Then we move to a subscription for the data pipeline, and then we can have additional revenues through our own dashboarding. So we're looking to raise $750,000 primarily to basically take what we have and deploy it
And
at
your
scale.
time is up. It is time
Cool.
for investor questions. Metin, do you want to jump in first?
We'll try. I'm not an expert on that issue. At the end, one of my main question was who are your customers, but actually you mentioned it. It's from the hospitality and transport section. Are there any? I mean, two questions. You mentioned that there's an intransparency in the data and complexity, and considering what you said, the huge amount of data. How do you get them? I mean, are they not somehow embedded in silos? How do you crack them up?
Yeah, so what we're doing is we're going direct to the contractors. In the US, they will be called haulers, but elsewhere we might think of them as waste and recycling contractors. And so if you think of a large multinational corporation that's operating across, say, hundreds, if not thousands of sites globally, each of those sites is contracting with a number, often quite a lot, of different companies who come on site to collect hazardous waste or collect recyclable waste or specialist kind of waste materials or metals, whatever it might be. Now they're all collecting. They all have data that they're collecting because they're using that data as a sort of to manage their own businesses. But that data isn't then shared with the customer normally. What the customer normally sees is a bill. And that's basically where a lot of companies are building their whole kind of reporting and performance measurement on, is kind of billing data, which is not designed to give you a really granular view of the material, how much of material there was, where that material was taken, and what happens to that material. But equally, those companies are increasingly reporting on what happens to that material. So they're doing so with what we believe to be suboptimal data. So what we do through our global waste data team, we map out with the customer where those sites are, what those materials are, who are the entities dealing with that material. And we then, through our waste data team, actually make contact directly with those entities. We tell them what we're looking for on behalf of their customer, and those entities start to sort of share data with us. Now, this is where that gets really interesting, because that data will be coming at us in obviously spreadsheets, but CSVs, data warehouses. We even see data in WhatsApp messages from somebody that's got one vehicle operating in Phnom Penh, for example. So our ability to automate the, if you like, the processing and the normalization of that data is really the key thing for us in terms of our ability to kind of scale, because clearly we do need humans in the loop to engage with other humans. But equally, once we start to see that data, then we can kind of automate that process. And that's where the whole, that's obviously where we're sort of using AI tooling and so on and so forth to do that. So yeah, I don't know whether that answers your question or not, but
it does. And maybe one another question. So you're not able to, enhance the data that is already there, but also to fill the gaps. Am I right?
Yeah. So essentially,
Okay.
clearly we're seeing data from multiple entities, and this goes back to the bigger kind of picture piece here, is that by putting together or aggregating all of that data that we're seeing across all those entities in all of those countries, each of our customers gets value from our ability to be able to sort of see what's happening across that kind of broader system. And part of that is essentially this registry of sites where we build this picture of what's happening at these waste sites using kind of licensing data, permitting data, other metadata, earth observation data, and so on and so forth. So yeah, we're filling gaps, identifying risks, equally identifying opportunities for them to save money or drive efficiencies, drive synergies internally, for example. But equally, we're augmenting what they already see. And we're absolutely taking them from a position where they have very limited visibility to one where they have essentially audit grade kind of data.
Last question.
Yeah.
Are there any laws or regulatory changes that forces them to get the data and report them or audit them?
Yeah. So there's a whole bunch of kind of, obviously within waste management itself, there's a whole piece happening around things like extended producer responsibility, digital product passporting, and so on and so forth. But again, some of that, it's all quite sort of piecemeal. And equally, there's a whole bunch of new reporting requirements. I think you're in Zurich, are you? So
yeah.
There's the Corporate Sustainability Reporting Directive, which has come out of the EU. They have rode back on the numbers of companies that will be required to report to that, but there's still a lot of companies, even non-EU companies, that are required to report to that. So so this whole reporting piece is starting to roll out everywhere. In some countries like the UK, we have a digital waste tracking system that's being rolled out by the government. My team built the prototype of that system back in 2020, but again, that will make it easier for us to extract data from entities in the UK because they should have that data kind of available to us. So again, we're trying to do this, we're currently data from 50 plus countries. So the regulations vary, but there isn't a single beautiful alpha that's kind of going to create, a single kind of beautiful kind of data set and all this stuff.
Thank you.
Thanks for your questions.
Yeah, thanks, Michael. Really appreciate the presentation there. Can you help me understand what incentivizes haulers to provide this data to you and to ensure that it is valid and accurate data?
Well, I don't know about the valid and accurate bit. There's still questions around that. But their incentive to share it with us is that we are not the ones asking the question. It's through a letter of authority from our customers asking that question. So it's basically on behalf of customer X, who you are contracted to, and essentially as part of your requirement to sort of continue engaging with this customer, we would like you to share this data. So in our experience, I mean, we're seeing data from 400 plus haulers of many different sizes globally, whether it be Waste Management Inc., whether it be Veolia, whether it be one person with a vehicle in Jakarta, for example. There's sometimes a bit of head scratching because a lot of the entities in this, and this is one of the problems with waste generally, it's a fairly unsophisticated kind of industry in general. And so a lot of these entities aren't really set up around data and data management. But that's why we have this process where we sort of do this kind of gap analysis, look at what they've got. And even if it's coming from a WhatsApp message, as long as they know what the kind of thing we're looking for, then we can normally start to kind of get something there. So that's their incentive. If you don't share this data, then you will essentially potentially lose the business. What we're also seeing, and we've seen this with some customers, is that they then have started to build this specific requirement around data into their contracts with those haulers. So ideally, that will be done from the outset, but what we're doing is basically giving them empowering them with that sort of with that ability to be able to sort of do that retrospectively.
That makes a lot of sense. And maybe we can go back to the valid data question. And I think this is almost a twofold question of how are you sure, how can you validate the data that you're receiving from haulers?
Yeah.
And then the second question is, I'm assuming sometimes they have the data that you need and they're actively collecting that. And then sometimes they are not actively collecting that data.
Yeah.
How are you helping them establish protocols to collect the data that you need for your customers.
Yeah, no, that's a really good point. So going back to that retrospective piece then, so in what we've seen is actually quite a few of these entities who haven't really been sort of collecting this data in a kind of organized way. We sort of give them our kind of taxonomy or our sort of schema, and they kind of go, okay, well, we'll start to sort of collect data in that way then voluntarily, because actually they start to think, well, actually this might be helpful to our business as well, not only specifically in relation to this customer engagement, but more generally. So we're kind of happy to do that as part of that initial piece of work that we need to do with them in order to sort of get that data moving. Once that's done, then obviously we can kind of push that into the sort of the pipeline. In terms of the validation thing, it's a data science thing, right? So the taxonomy has things like container sizes. So for example, if somebody says we collected 2 tons of waste in this one container, but this one container actually is a 1 ton container, it just flags it. So we're able to sort of flag inconsistencies. So we're not waving a magic wand and saying, we've got this kind of perfect, beautiful 100% view, but we can provide a much higher statistically significant level of confidence in what they're seeing, both in terms of the type of material, the amount of material, but equally going back to the registry, when they say, right, this material was, we force them to tell us where they're taking that material, because that isn't something that they necessarily are, is already shared. We then build that picture of what happens at those locations. Is that a MRF? Is that a recycling site? Is it a transfer station, et cetera, et cetera? We then see what else happens to material from other sources in those locations, and we can kind of monitor those sites as well. So we can provide a pretty good defensible view of what we think is then going to happen to that material, even if we can't ultimately see the full kind of chain, because of course waste gets transformed, it gets stored, it gets processed, pre-processed, it then goes off somewhere else. So seeing that full waste chain can be very difficult, but by knowing where it goes and what happens at that first location, we can provide a pretty good view of what we think is ultimately going to happen to that material. Now, it's not perfect, and at least initially it's not perfect, but of course the more data we see from our own customer across all of those customers in a particular country, the more we can kind of pretty well predict what's going to happen to waste in Saudi Arabia versus material in Chile, for example. So that's the thing.
I need to jump in. I'm sorry.
Okay, no worries. No worries.
Let's get a chance. Thank you. Thanks for presenting. Sorry, somebody's got to be the jerk sometimes, or somebody's not going to get to pitch the full session. So
thanks.
For up next, how about we hand things over to our Mark with Cleanergi. You want to take things away, Mark? You ready?
Yes, I am. Thank you very much. Let me see if I can get on to presenting. Share screen. Okay, name's Mark Howitt, founder and CEO of Cleanergi. We're all about enabling renewables to power the world affordably, reliably, and resiliently. And I'll start off with an apology. I'm going to skip through these slides. There's an awful lot more information on them. You can read them at your leisure. I've already posted it. So how do we enable the transition to be affordable, reliable, and resilient at grid and infrastructure scale? So for grids, you need the storage at the right scale, duration, and cost. You need ancillary services. These are the services that make the grids operable, reliable, and resilient. You need to make them available at the right sort of scale in the right places. There are increasing problems with starting grids after blackouts, and you need to solve those problems as well. And the biggest problem I see with grids is that the more renewables you put on, the more expensive it gets to do so. And you've got to address those issues, because the difference between using our methods across the whole grid and not using our methods, for the British grid alone, which is less than a fifth of the size of the American grid, is about $1 trillion, over $1 trillion cumulatively by 2030. 2030. And so it's a really big issue. Now, our lead times are a bit longer than that. And sorry, it's 2050 that they're $1 trillion. So you've got to address the cost of the energy transition as a whole thing rather than just as the cost of the bits on it. So for generators and users, you need to enable renewable to connect to weak grids without huge upgrades of grids. And as you know, the biggest problem with new businesses coming online, data centers and all of that, the fact that there isn't enough grid for them. So you need to have reliable power despite highly constrained grids. There are very few grids in this on this planet that aren't constrained for capacity. You need to reduce or eliminate grid charges, which can be extortionate. And in fact, they have risen from below 20% of the cost of a grid pre-2015 to above 80%. And so anything that you can do on that side would help greatly. One of the biggest problems of connecting anything to the grid is that prices fluctuate unpredictably. And that makes your commercial risk enormous. So if you can fix those prices long-term for life of plants, that would be an enormous benefit to your business. It reduces, and you need to reduce or eliminate grid-related regulatory risks and cost. Regulatory risk, basically regulators and markets are working out how to manage net zero grids and how to manage from here to there. So regulations and market designs are changing faster than ever. So how can you reduce or eliminate those risks? So we can solve that with our 4 technologies: Clean Case, Clean Start, Clean Grid, and Clean Park. So what are those technologies? The first 2 are on this slide. Clean Case is the fundamental one, which is large-scale, long-duration electricity storage. Adiabatic compressed air energy storage. Basically, we store the energy by compressing air and storing it underground. It's been well proven since 1979 in Germany and 1991 in America. And this is a refinement of it, a simplification of it that makes it infinitely more efficient and cost effective. Clean Start is an adaptation of this. This is the only method available for restarting grids at grid scale without having to set aside capacity and therefore foregoing revenues. Clean Grid is using it to connect renewables to the grid so that you can actually reduce the size of grid connection by somewhere between 1/2 and 7/8. And that reduces grid reinforcement from national to local. So if you can do all of those enormous reductions, you're saving billions on every single major project. And then there's Clean Park, which you can use a similar sort of structure, but powering the renewables, the Cleantech together and the data centers together. And in such a way that you can also get synergies from business to business within supply chains. This is just a graphic illustration using old information because new information is not published. To show,
Mark.
Yes.
I'm sorry, your time is up. You're going to have to hope the investors ask about it in the questions. Aaron,
Okay.
you wanna go first and open things up with Mark?
Yeah, sure. Thanks, Matt. Thanks for the presentation, Mark. I agree with a lot of your points on the challenges in the grid today. Would love to understand your IP today and understanding what is the hardware and or software that is unique to Cleanergi here.
Okay. All compressed air energy storage essentially compresses air at large scale, pumps it underground, releases air, and drives a turbine to regenerate it. Every other compressed air energy storage technology uses specialized equipment that's designed and approved for the job. We're the only one that can use off-the-shelf kit. because of our process. Our intellectual property is in the process and how we do it. Then that enables us to use a couple of dozen non-Chinese suppliers instead of being tied to a single supplier. It means that we can use any size of equipment, any pressure of storage, whereas all the competitors are much more constrained than that. And because we can use off-the-shelf kit, it's already benefited from 150 years of cost down and R&D and reliability engineering. So it's much more reliable and cost effective and cheaper.
Got it. That's helpful. And it looks like it was compressed air storage underground. Would be helpful to understand what are the limitations around the type of projects where it can be economical. What do you need to see at a particular site to decide that it is worth moving forward?
The limitation on site selection, basically, you've got to have the right geology. At the moment, that's underground salt basins, but you can find them in 26 American states, in 4 Canadian provinces, in most European countries, in every country in North Africa, and most of them in the Middle East. So that geology is plentiful. All the others are constrained that they can only use a very small part of it. We can use most of it. At the same time, we can also in future develop into other geologies. We can also use certain mines and things like that. So those are believed to be constraints much more widely than reality would bear it out, especially with our plants that can use far more locations.
That's helpful. And maybe we can, it sounds like not having quite as strict of pressure requirements is core to that site selection value prop then. Can you help me understand how your technology has fewer pressure system requirements than a standard compressed air storage, especially given the off-the-shelf equipment there?
Okay, the reason why pressure is critical is because the pressure is determined by how deep below the surface the salt layer is. All the other plants use between 60 and 120 bar maximum pressure. We can use anything from 17 to 350 bar, quite simply because they only have one type of equipment that they can use. We can use anything from off the shelf. We can use it's a modular system. I can use a number of steps in the process that enable me to increase it and decrease it. So I can have a 2-step process down to 17 bar, a 3-step process if it's around 100 bar, a 4-step process if it's around 200 bar, 5-step process if it's around 300 bar. The other ones don't have that flexibility because they use dedicated equipment that can only work in that narrow range of 60 to 120.
And what keeps them from using some of the other off-the-shelf equipment?
Their designs. Their process design is absolutely bespoke, requires bespoke equipment. And therefore, they have to modify equipment and get them certified and accredited from scratch. Our process design allows us to use off the shelf.
Great, thanks for the answers there. Metin, I'll pass it to you.
Thank you very much, Mark. Actually, I don't have a question. Understood what you want to develop. I mean, compressed air storages are quite interesting, and I remember in Canada they have a company that did that with a really big plant, and it makes perfectly sense for the transformation of the electricity grid or electricity system. Just the feedback on your end on the presentation. When I saw all these, I mean the compressed air energy storage, the clean grid, and the clean park integration. Just for your presentation and pitch, it would definitely make sense to put the compressed air energy storage first. So this is your main focus. So developing that and having a plan and developing the plan, it takes a lot of time, lots of money, and it's a complex topic by itself. I would recommend that you put the clean grid and the clean park topic as a vision. not as one of your focus fields. Focus
Amen.
on one. Sorry.
Amen.
Well, thank you for that recommendation. The reason why I did it this way is because I originally did it that way for a while, but found that the grid regulations and market designs are actually quite hostile to building a standalone compressed air energy storage plant. So then, in order to maximize the revenues and the financial benefit for the system, I looked at ways in which we could do so, and the Clean Grid and Clean Park actually vastly increase the benefits to the system, benefits to users, benefits to investors, that make up for the fact that market designs are downright hostile.
Understood.
Even though
Yeah.
in today's markets it would still be profitable as a standalone.
Yeah, understood. And it makes that perfectly sense. I totally agree with you. But talking to investors, that could help you if you say, look, we're focusing first on that, but because of the environment, because of the regulation, because of the constraints on the grid, we're also planning to have all these other projects as well. But focus first
Thank you.
on that.
Thank you.
You're welcome.
Matt, I think you're on mute.
Oh, no. Well, I want to thank you for pitching, Mark, and then move things on to the next company of the night, who would be Echoz and Sashi or Yashi?
Yeah, it's Yashi.
Yashi. Yashi, you want to take things away?
Yeah, sure. Just give me a minute. I'll just share my screen. Is my skin visible to you all?
Yes, it's looking good.
Am I audible?
We hear you as well.
Okay, cool.
Go for it.
All right.
It starts now.
Yeah. Dismantling the 18% transport emissions friction layer. Hello, everyone. My name is Yashi Gupta. I'm the founder of Echoz. Well, Echoz is a AI-powered matchmaking engine routing daily commuters to a zero carbon future. We are here for the ask of somewhere close to 0.75 million USD, that is close to 6.25 crore. And this is not for just for validation. We are asking for somewhere validating the process and actually scaling and other things as well. So that amounts to somewhere close to 24 months. And our destination is, massive trackable corporate carbon reduction. Let's begin, and I'll navigate you through how we are going to do that. So coming back to the problem, what is the problem? We know that more than 18% of global greenhouse gas emissions are driven by transportation sector alone. And out of those 18%, more than 45% are driven by light duty passenger cars or vans. And our mandate is to reduce that by somewhere close to 50% by 2030. That is the project drawdown baseline. So solving this problem, I felt like wasn't a major challenge as such, because it's a major challenge, but when you look into dig deeper into it, how are we going to solve this problem in the first hand? So it's 18% global greenhouse gas emissions, and 45% is caused by passenger cars and vans alone. So when I looked deeper into the problem, I found out the major problem is into the core problems of the daily commuters and the travelers that are there. So when we look at, we can't just simply ask people to just switch off their cars and start moving go by walk and going through that process. We can actually do that, and that can easily be achieved. But again, the question comes like, while we are traveling via car, we have invested so much money. And apart from that, there is also some constraint related to it. So let's look deeper into like what are basically the problems of the users are. So that is what we focused on. What are the pain points? Once we crack those pain points and are able to provide the solution to those pain points, then we should be able to basically. Sorry, I'm just not doing the slide. Yeah. So if you are able to solve those pain points, then I think we should be able to nudge them towards a more sustainable mode of transport as well. So looking into the problems per se, we identify that the number one problem was the F fatigue. So if you talk about Indian diaspora itself, so there are somewhere close to basically there are somewhere 3 to 4 apps that because of which the user juggles up. I mean, they need to open three four apps to actually juggle for their routine commute. And the second problem that comes into picture is the last mile anxiety. So even if a person reaches from point A to point B, in order to reach to point C, that is their home destination, they still need to, they suffer the logistic risk of being stranded for the final 2 kilometers. So the second problem was that, and the third problem was cost illusion. So basically, cost illusion is like even if they have multiple apps, there are search prices, and apart from that, like behavioral tendency that solo car purchase and insurance as sunk cost. So these are the key problems that we identified. So the current status quo is like there are static paths isolated to one mode, and booking interface is there. But it's like, again, as I mentioned, it's manual context switching across isolated Uber Metro apps. And also environmental data is unknown. Although there are some apps like Uber and others which have started bringing in those factors into account. But again, that data this is something which has recently come up and has not been in the picture from past couple of years. So what does the Echoz intelligence layer does? It provides dynamic
30 second
cross-parameter
warning.
routing. Sorry.
30-second warning.
Okay. Deep linked one-tap booking and exact carbon avoidance calculated real time. Again, spreading environmental awareness does not shift the behavior. Building a superior friction intelligence layer does. What does Echoz does? If you type I'm traveling with a kid and provide a faster eco-friendly mode of transport along with origin and destination, we provide a one-tap redirection to different platforms to our intelligence layer. And this is something which we have validated, and we also kind of
And your time
sure.
is up. What are you asking for? What's your ask while the investors are getting ready?
Yeah, so it's 0.75 USD.
Awesome, thank you. Metin, Aaron, do you guys have questions for Yashi? Obviously, she's earlier than some, but very interesting problem.
I mean, of course, you've not finished. I mean, thank you very much for the presentation, and you're tackling really a huge problem, especially as you said in India. I mean, 16% of greenhouse gases based on mobility, and the three main issues you mentioned. I would like to understand. I mean, we did not have time to fully dig into the solution yet. How do you solve all these three issues you mentioned in the problem side? So you have have an AI layer that recommends the commuter or the family or the person who has to go from A to B which type of mobility or transport the person should use. Is that right?
Yeah, exactly. So basically, if you talk about if a person enters, let's say, origin A and they want to reach a destination B, we first capture those information from the user, and then we actually ask them what are their preferences, like whether they want their commute or their travel to be, safest or basically cheapest, or it has to be eco-friendly, or we have different parameters. We allow maximum of 3. Apart from that, we also have a AI prompt box, text box, where they can actually enter whatever their preferences are apart from the one given above. And then we kind of use that information to plug in into our AI engine, and we do calculations in terms of different factors: time, cost, safety, cancellation risk, and other factors, and provide them with a consolidated and decision. I mean, basically, based on upon our ML model, we actually provide a best route and the best decision they could go ahead with. Basically, multiple, and also allow them to book via a platform through by redirecting them to a third-party provider.
You know what I really like regarding that slide is that you add a gamification layer onto that. I mean, if you want to go from A to B, the highest priority, at least for me, is to reach B as fast as possible. So, period. Seeing also the carbon footprint, that's the first part, is great. So if I can see my carbon footprint when I commute, that would be a game changer. So I would like to have that. That's nice. But also, if I have another recommendation to go from A to B, maybe even faster, or maybe with maybe 5 to 10% longer,
Or cheaper.
That's even better one. And then having a dashboard saying, look, this is something that incentivizes me and motivates me to use that route and that type of transportation. That is a game changer. So thank you for that. One feedback on your slide and your presentation, you put too much time on describing the problem that you identified. Ideally, just put 30 seconds, say, look, this is the problem that we identified, especially in a certain region, and then immediately go to the solution slide and ideally put some numbers. So with our solution, our commuters, as Matt said, can reach B faster, cheaper, and environmentally friendly. So don't spend too much time on describing the problem.
I imagine
Sure.
safety would be a big thing for females as well in India.
Wow, that's an
Yeah.
even great. Wow.
Thanks, Matt. Thanks, Metin. Thanks for the feedback.
Thanks for the presentation, Yashi. Would love to learn a little bit more about the data that you're collecting to ensure real-time optimization. I imagine it becomes challenging both in terms of understanding traffic, where there are roadblocks, but even where is the bus at? Is it going to arrive on time? Have I missed it? How do you collect that real-time data, and how do you ensure that you're providing your customers with the most up-to-date information there?
Yeah, sure. So on that front, I would like to say is like basically as part of the MVP that we have shipped so far, we are kind of doing a manual scoring as of now. In terms of, since we are not a booking platform as such, we are moreover an intelligence layer. Basically, we provide a comparison in terms of different modes of transport within our system. So it's moreover a comparison of sorts. So if you talk about that data, so as currently it's more of a manual scoring, but moving forward, what we are planning to achieve is we are going to be collecting that data through Play Store and different community reviews that are there of different apps and systems that are there, and we are gonna run it through our AI agents and AI models to actually filter that out and actually come up with a score to display to the user. Now, does this answer your question?
That makes sense. So pulling quite a bit of data from third-party operators that are already collecting it. Am I hearing correctly?
Actually, not exactly from the third-party providers as such, because they were different from doing that in the first go, since we are in the initial terms. But what we are planning initially is to actually scrape that data from the Play Store reviews that are given by a number of users on, let's say, Google Play Store or App Store or different community forums that are there. So initial data would be there, and moving on, once we have reached a certain scale, we are going to improve upon that in various terms. Let's say if you're traveling at night at 9 p.m. at a particular location, what is the best and what is the safest and what is the most comfortable means of transport that should be there, and what are the different providers in terms of, and we also provide the rankings there, like which is the most safest and those things. So this is how we plan to do it.
Got it. That's really helpful. Matt, do we have time for more questions, or should I hold?
I think we got to move on to our last presenter of the night. And depending on Metin and you, Aaron, and I'm not sure when your stop is, but we've got one more at least. Are you guys good for more questions now, or should we jump to the last presenter?
Matt, don't we have two?
Do we have two? I might be bad with math. We
You
definitely
have me, it's Qualus, and yes.
Well, math wasn't the strong suit. Let's jump to Carrie with Qualus then.
Okay. And you had the gentleman that was
Michael
muted.
Alligator. Yes.
Yeah.
Good call.
All right.
Let's hope that works now. Michael, you get to finish strong. Make sure the microphone's ready to rock. Once it's
Yeah, let's. Is it working now?
Seems to be working now, so we'll be
Okay.
good we'll finish strong.
Okay.
All right. Can everybody see my screen and hear me?
Sounds good. Looking
Yep.
good. Take it away.
All right, super. So we are Qualus. Qualus is a commercially proven industrial climate solution, meaning that we have revenues that are already coming in. But what we do is we make leather better. We help manufacturers of leather make their product better for the environment, for the customers and consumers, and for their profits. So we're looking to raise 1.2 million in 2026. We'll be following with the Series A sometime in the first half of 2027. So what do we do? So in the leather industry, leather is a byproduct of the meat industry, and due to the supply hides it every year, and about 40% of those are still not used. So that's our growth factor, right? We have a lot of growth available. It's a $60 billion market. The challenges are that we use a lot of water, 1.2 liters per meter squared, and we create a lot of effluent and waste that has to be treated and recycled. And also we have a carbon footprint that could use a little bit of help. 40, 30, 20 here. I'm going to do it a little bit out of order, but we help the tanneries to save 40% less. They use 40% less water, which is significant. It's about half a liter out of the 1.2 liters per square meter. And 20% less chemicals. This is where we help their margins, and 30% less effluent that needs to be treated. And that effluent is also cleaner when it comes out. Those are the key things that I'll focus on there. Here's the spheres that we use in the process, and you can see them intermingling with the leather. The spheres actually take the place of water or a lot of the water that's used in the tanning process. We're currently creating revenues in 4 countries, but we're laser focused on 2, Mexico and India. Why Mexico and India? Well, there are 2 countries that are suffering from significant water scarcity, but they have large tanning industries. And those tanning industries are located in what we call a cluster. So you get a lot of tanneries in a relatively small area. It allows us to be very efficient and get to many customers. On the right-hand side here, you see some of the brands that are already using leather that's created with our process. How do we get paid? That's important, right? So we have installation fees. We have to do a minor retrofit for the drums in order for the customers to be able to use our spheres, and we have to provide them with some machinery to collect the spheres after they're used. That's one way we get paid. And for the tanneries, the savings generated gives them an ROI in less than 6 months. And then our main course of revenue is rental of long life spheres and a cleaning service that we provide to have those spheres ready for the next time. Our TAM is we're looking at about $4 billion. So if we get 10% of the global market, we can save 10 billion liters of water per annum and 100,000 tons. I'll talk to you a little bit more about what we're doing for this year in a minute. So the team is made up of industry experts. I've been in the industry for 30 years. I've worked and run major tanneries globally. I also worked for 12 years for Wolverine, which is a housing company for 12 brands. I ran all of their sourcing for material sourcing. And I also ran a large multinational tannery for them. Richards is incredibly skilled in finance and strategy, and also educated in engineering. We have a project manager. Our board member, members are investors and business leaders, and our industry advisors are industry experts and with about 70 years of experience there. 2027, we're looking at increasing our markets, and we'll dive deeper into Brazil, which is the second largest manufacturer of leather in the world. And we'll also be diving into Italy, which is the largest manufacturer of leather to the fashion brands in Europe. 2027, 28, there's lots of partnership opportunities that we can definitely dive deeper into at a later time. Looking at cash flows and how we're moving along in terms of revenue, you can see the growth is kicking in 2026. That's pipeline, lots of innovation that we've put in place. And then we have more innovation in works, and that's where you see the ramp up through the rest of the year, including as we get past that Series A, we'll be moving quickly into other countries.
30
So
seconds.
if you look in the reductions, I told you about 121 liters of water per square meter, and we can save 38%. That's about 700,000 liters saved in 2026 year to date, and 4 million liters for 27. And I've already told you what we're looking for, and this slide summarizes what we're going to do with it.
Up 1.2 million to expand in the emerging markets in a big way.
Mm-hmm.
Carrie, thanks for pitching, presenting. Let's bring back our investor panelists, Metin and Aaron. Aaron, do you want to kick things off?
Yeah, sure. Thanks, Carrie, for the presentation. Really appreciate the clear value prop that you indicated for customers there. I'd love to learn a little bit more about how the system works. How are the spheres achieving these benefits in energy, water, effluent reductions? Is it the displacement of water, their shape, their material? How is the technical system working?
So the water acts as a lubricant for the hides. It keeps them moving. Oh, can you hear me? Did I freeze up there? I'm sorry.
You're back.
So, okay, good. So the water acts as both a delivery method for the chemicals, but it also acts as a lubricant of the hides as they're moving around in the tanning drum. A tanning drum's like a big washing machine, but it's filled with hides, water, and chemicals. And so what the spheres do is they take the place of the water in terms of the lubrication, and the mechanical action of the spheres actually helps to drive the chemicals. It does a much better job of driving the chemicals into the leather. So in addition to making the process shorter, making the process better, making the process with much less water and chemicals, more of those chemicals that are in that chemistry are going into the hide and less are coming out as effluent.
That's really helpful. So I imagine like my dryer balls almost in my...
Correct. It's a similar idea. Correct.
What keeps your customers using your product versus manufacturing their own or going to another provider there?
We have a wonderful process patent that helps us to maintain that. And what keeps them using it is because it works. And so typically when we enter into a tannery, say they have 10 tanning drums, we enter in with 2 and we work our way up to 10. The way we do that is because we show that it works significantly. And tanning, like the trucking industry, is a low margin, a little bit better. It's about 4 to 10% in the margin, and we can help them anywhere between 40 to 60% uplift just because of the chemical savings. But there's other things that it does as well. The mechanical action helps the leather lay out flatter and smoother. There's less wrinkles, more cuttable area. And it's so important for yield because we buy in the tanning industry, we buy by the hide and we sell by the square foot. So the bigger the yield, the better the return.
Great. Thanks, Carrie. Over to you, Metin.
Just to feedback what you just mentioned, the uplift or 40% in margin because of less chemicals is very important. You should put it on a slide deck.
Yeah, it is. It's in our master deck, a 5-minute talk. I will do that, Metin, for sure.
Put it very early.
I like the
very early in the presentation.
Yeah, I like the idea to from a sustainable point of view, to have less water, which is really important, chemicals, waste, and also carbon footprint. But for your customers, I mean, saving or having that uplift is great. Nice.
Yes, agreed. Thank you for that.
I also liked that you put the ROI of 6 months into the slide deck. It helps me as an investor. I have no, I mean, leather is for me as a completely black box. I have no idea how that works. But seeing this return on invest on 6 months is great. Now, I had one question, but actually you answered that. How sensitive are these leather manufacturers in terms of pricing? I mean, you can even increase the return on invest maybe up to 12 or 24 months, so your return is quite higher. Is that possible from your experience?
It could be possible as we grow, but it is not possible right now. It's extremely tight, and so in order to convince them of the to get the spheres into the drum, we have to have a very quick return on investment so that they'll jump in. Yeah.
Okay. But maybe on the long run, you should maybe plan a little bit.
I absolutely agree with you. Yeah.
Yeah.
Yeah. It makes us independent quicker.
Yeah.
For sure.
Again, I repeat myself, sorry for that. I have no clue on the leather industry or any, fabric industry, no experience. Do you see any other industry that you can enter with your product or technology? Or is it just leather?
It's just leather.
Okay.
Yeah. Yeah.
Well, no further question. Was a great pitch.
Any major competitors in terms of as you guys are rolling out? What's the kind of bottleneck that's back?
Yeah. So the chemical providers are making chemicals where you can use less chemicals, but those are typically much more expensive and they don't save on water. The drum manufacturers are working on drums that can help save some water, but nothing near the magnitude of what we can do. And in addition to that, is even in these modern drums, we can still save 40% water. Because the spheres, as I said, are taking the place of the water in the drum. They're doing technology in the flow and how the hides move, but they're not replacing the water with spheres. And the spheres truly act as that conduit to get the chemicals into the leather better and also to replace the water in terms of lubricating. If you don't lubricate the hides, you could take out the water and try to run the hides, but the temperature inside the drum would ruin the leather. So you have to have some kind of medium to interfere. And anytime you want to learn more about leather, give me a call.
And this might sound like a dumb question, but how much of the global leather production is done in countries that are massively at water risk going forward in terms of having accessible access to water, so that the cost going to be the reason people change, or is it going to be the water?
There are many countries that are water scarce that make leather, because leather is a great employer. It takes a lot of people in the factory. And so when you're in a country that's developing, like India, for instance, they have about 4 million people that are in the leather industry, working in that industry and trying to get to 10. But India is also publishing major laws and putting in place major laws that they want to standardize to international norms what's happening in the leather industry, because they have good players and they have bad players, right? And so those are things that are helping us. Number one, the water scarcity helps us, but legislation is also going to continue to help us because it helps them to be compliant for what's required.
Understood. Carrot in the stick. Well, last but absolutely not least, I want to thank you for pitching, Carrie, and move things on to our final startup of the night, Michael with Alligator. Speaking of leather.
Okay, can you hear me now?
You are good to go. Let's see what you got here.
Okay, yeah, it's about heavy transportation vehicles, and those vehicles are responsible for 30% of the global CO2 road emissions. And the biggest share of those vehicles are tractor-trailer units, consisting of a tractor and trailer. In Europe, we have currently around 3 million of those vehicles on the roads, and we also see a strong growing rate at the electric tractor trailer units. But at every electric tractor trailer unit we have today on this planet, the high voltage energy network is limited to the tractor. And this actually leaves a huge unused energy source, the trailer, behind. On those trailers, as you already saw in the beginning from Stephen, there is space to place solar panels, sidewalls, roof of solar panels with a size of a PV installation of a one family house. We have the opportunity to recover up to 16% of the total energy consumption at the trailer brakes, and also placing batteries on the trailer is great for improving the weight distribution, so means more payload, and also to extend the range, and independent trailer charging. Independent trailer charging, this is a very interesting thing. In this way, we can not only load trailer independent from the tractor with goods in the depot, we also can charge them with energy at the same time. And this is amazing because in this way we can reduce the energy costs a lot. So approximately charging an electric tractor trailer unit costs around $100,000 at public charging station at 1 year. And with the concept like this, it's easy possible to reduce the energy costs by more than 90%. And now you probably ask yourself, why does this technology not already exist? So answer comes from the SEVES project. This is a big research project from the European Union with the electrification of heavy transportation vehicles. They call this concept a B-trailer. And they say the B-trailer is an amazing future technology, but it's not possible to build a B-trailer today because there is no technology existing for connecting big, fat, high voltage power lines between the tractor and the trailer on a moving vehicle. And at the same time, when they found this out, we were already testing our planar feed-through technology on Swiss roads. This technology solves exactly this topic. It stays compatible with the existing fifth wheel kingpin connection, and yeah, what else? Yeah, ladies and gentlemen, what you see here is the world first solution that makes a high voltage energy network over the entire vehicle possible. Yeah, here a few other pictures from our test rides in Switzerland. With our team, we are working in the Innovation Park Rotkreuz in moving this technology to a market-ready product. We get great support from the government in Switzerland by InnoSwiss, and also the University of Applied Science in Lucerne and Bern are working on this technology together with us currently. So what is our strategy? Our strategy is to sell our hardware solution on to system integrators, vehicle converters, and research projects of OEMs. In a first step, on long term, we see a huge potential in selling licenses of our technology to tier one. So in this way, we can reach the OEM industry of tractors and trailer. The market is already huge, and it is becoming much bigger every year. So where we are staying right now, we have currently 3 non-dilutive ongoing projects. One is co-financed by a big Swiss logistic operator, Dreyer Logistics, where we have a feasibility study for the integration of the technology in their fleets. Also, we have currently an ongoing project for improving or making our connection technology ready for real-world operation. And a partner company in Germany also has right now an ongoing project founded by the government in Germany for the development of the power electronics for the complete system. So when we have those 3 projects together, we have everything together to build the world first tractor trailer unit with a complete energy network. Thank you so much for your attention, and I'm very excited about your questions.
I am awarding the picture presentation voice of the night to Michael for enthusiasm. He definitely picked that one. And Aaron, Metin, you guys gonna come in? I'm sure you've got questions for Michael. It was quite a pitch, and it's very interesting.
Yeah, this is great. We started with tractor trailers, and we're ending with it. Appreciate the full circle here. Maybe we can start off with understanding relationship with OEMs a little bit further. And I'm going to ask a question that I recognize may be US centric. So let me know if my model is inaccurate in Europe. In the US, most trailers are sold through their network of dealers, and those dealers have quite a bit of value prop in the O&M. How are you working through those dealers in addition to the OEMs to ensure that the product can get to market and is a product that the dealers are willing to help support?
Yeah, this is a very good question, and this is very difficult in this industry. Also, as you saw in the first slide, we have there are leasing companies, we have tractor manufacturers, we have trailer manufacturers, and this is actually the reason why does it not already exist. So how do we handle this? By collaboration. So we are collaborating with OEMs. For example, for this pilot project, we got a sponsoring from Krone, the biggest trailer company in Europe. They sponsoring the trailer where we placing the batteries. We are involved in 2, hope soon 3 research projects of tractor OEMs for the integration of the bidirectional energy interface from the tractor to the trailer. So yeah, it has to be done by collaboration, and this is also our strategy. But that's why on long term we are planning to sell licenses to tier 1, so we can move this technology, let's say, to the existing industry. Yeah.
Got it. That's helpful. Last question for me. How are you sizing the batteries, and how are you thinking about providing the appropriate size, recognizing that there are many different use cases and lengths of routes that these trailers might need to go on?
Yes, we only focused on the interface. For the pilot project, we are using a battery from Echoz. This is a Swiss company, but this on long term, we are not interested in the battery business, only in the interface. So in the end of the day, it doesn't matter which kind of battery is on the trailer. For example, for the pilot project, we have 400 kV hours on the trailer, but I mean there is enough let's say payload available for more, but in the end of the day, it doesn't matter for us because we are focused on the interface. And maybe from to understand from the power electronic sides, what we are building is like it's not a direct connection of the 2 batteries. It's more like move a charging station. So we are charging from the trailer to the tractor when the vehicle is moving. So we this is maybe too deep in technical, but we are using a DC-DC converter like in a DC charging station. So we are charging from the trailer battery, the tractor on the move. Yeah.
Thanks, Michael.
You're welcome.
Hi, Michael. Just one, I mean, it was a brilliant pitch. So in my own words, what you do is actually a range extension for the truck. Is that right?
Yes and no. No, the vision actually is much bigger. The vision is a complete energy network. So a complete energy network to use all those possibilities in the board network of the vehicle in future. But in a first step, you're right. In the first step, it's about the range extender. But our part of this system, or our long-term focus, is only the connection, the power line connection, because all other technologies you see here, batteries, DC-DC converter, axles, solar panels we saw in the beginning, those are all existing technology. You can buy them on the market, but there is no solution existing today for this power line connection. And exactly on this missing technology is our focus.
Okay.
But the connection itself does not create any value. That's why we are working right now on the complete system. Yeah.
Right. No, I'm pretty sure you have that slide or these calculations already. Two questions. One question. So you're retrofitting currently these trailers?
No, this doesn't make sense. A brand new trailer costs a cheap one 25,000 Swiss francs. So 400 kV hours batteries already costs 3 times more. So
Okay,
it
so you
doesn't
go
make
end of line.
It doesn't make sense to place retrofit. You make a new design, but you also have to know trailers are not rocket science, so it's a drivable box with some standard parts on it. Yeah.
Okay, so the aim is to get into these OEMs and being end of line manufacturer, at least, I mean, supplier. Is that right?
Yes. Of course, for the pilot, we are taking a standard trailer from Krone. We install all those things. This is for the pilot, but in the next step, this will be already installed from the trailer plant. And the trailers, this is not like tractor units. So we have maybe, I don't know, 1,000 trailer manufacturers in Europe, and they are flexible. So they can do customized things. Yeah. So let's say for small series in the beginning.
And last question. I mean, you have the trailer, so you're end of line, you're a supplier for these trailer manufacturers or truck manufacturers. So the trailer gets this technology, but the truck has to have the same technology as well. So you have to have also end of line production for the truck as well. Is that right? So there has to be the connection.
Yeah, this actually makes currently our project difficult. It's part of pioneer work, let's say. So today, the tractor units, they do not have a bidirectional energy interface. Today, state of the art, they only can supply energy from the tractor to the trailer. And what we are now working on is a bidirectional energy interface. So means we can also supply from the trailer to the tractor energy. So this is a lot of work right now, but what we see in the strategy from the European Union, and also we are in those research projects from the OEMs, so this will be available in future, but it's not available today. But let's say, it takes, OEMs are slowly, so it will take maybe 3 or 4 years, but in 3 or 4 years, you will be able to buy OEM tractors with a bidirectional energy interface.
Okay.
Yeah.
No question, but just one feedback. OEMs, as you said, are very slow. Maybe you should talk to the suppliers that deliver the technologies to the OEMs.
Yeah, we are in touch with them. So, for example, in the project we are working on, we have a tier 1 involved, SAF Holland. They are producing axles and fifth wheels. So it also makes sense to work together with the tier 1s compared straight to the OEMs, because this with the OEMs, this is a bit tricky. Yeah.
I used to work for ZF Friedrichshafen within the truck industry. So if you need a contact, let me know.
With Mark in Switzerland, in Bern.
No, in Friedrichshafen.
In Friedrichshafen. Okay. Yeah, I already in touch, because ZF also was working on a solution for this topic. Yeah.
Mhm.
Yeah, so yeah, maybe let's connect about this. Yeah,
Right.
yeah, I'm in touch with a few guys from ZF Friedrichshafen.
Yes.
Yeah.
Sounds like you got the Swiss connections all locked in. One last part of the call before we let you guys go for your early dinners or late morning coffees, depending on where you're calling in from. And that's the startup of the night. That's where the panelists choose if they were going to double down and bet, or which startup they are the most active, engaged, and see as the kind of biggest potential for a venture or a VC bet. Aaron, Metin, does either of you want to go first? Happy to weigh in and add an extra third tiebreaker if needed.
Sure, I'm happy to jump in. I will recognize my bias here coming from the energy storage sector and having faced the challenges of financing projects, but I'm going to go with RegenX. Recognizing that there are so many challenges in getting energy storage projects online, and financing is absolutely one of them, trying to connect all of the disparate parts there. But really fantastic job to all the panelists or all the pitch founders today. It was fantastic work and really appreciated the time to learn more about the projects that you're building.
And thanks for the projects you guys are working on as well. They're all very important. Now let's see who can take them forward. Metin, you want to weigh in?
Yeah. I'm also biased, of course, but I would go for the latter startup. Even though I have no clue how that works, but I think it's a huge moving forward to decarbonize and make it more efficient for this very important industry. But the rest of the startups, you did a great job, especially Michael. It was a quite engaging pitch. Thank you for that.
Yes, that was hands down the funnest pitch of the night. I think we can award that one right away. I also liked the leather one primarily because it had the sustainability benefits, but the actual kicker being the savings, which is what will cause the companies to adopt it and take things forward. RegenX was great. All the companies that presented, I thought, were impressive, and want to thank everybody for tuning into this newest edition of the Startup Tank. Again, we'll be doing these roughly every 2 months. We've got the next one already posted if you want to go and apply for that. Tag other startups or members who you think could be a great fit to pitch. Panelists, investors, if you want to be on the panel, get a little bit more exposure, like Metin and Aaron here, who are going to get their chance to be in the limelight and share where you can find them, other than the platform, of course. Then also apply, reach out, and we'd love to have you on board as panelists. And thanks to everyone who tuned into this. Remember, Forward's about connecting, collaborating, and helping each other move the world forward. That only happens if you reach out and meet other folks. So seriously, reach out to 3 to 5 other members, use the matchmaking tool, or just search through the platform, say hey and why you think you should chat or could help each other, and probably you'll find your next partner, client, investor, co-founder, etc., accidentally, and move the world forward. Metin, where is the best place for people to find out, learn more about you, and what should they send your way?
Ideally LinkedIn.
Okay, what are you looking for? Energie 360. What's the 30-second spiel?
We're looking mainly for energy transition technologies to decarbonize the operations of Energie 360. Of course, we're coming from a natural gas system, so we have to decarbonize. We're looking for new upcoming potential revenue streams, of course, together with the startups. And currently, we're looking into everything that is helpful to, I would say, innovate the grid.
Grid innovation. And how are you saving Volo Earth? Aaron, what are you guys looking for?
Yeah, absolutely. So like I mentioned, pre-seed to Series A startups across 4 main verticals: energy, buildings, industry, and mobility. We define those quite broadly though, so very open to conversations. Best way to reach me is on LinkedIn, and send me your pitch deck. We love to take a look at pitch decks. That's the quickest way for us to ascertain if there could be a fit and get it directly in front of our full team to review.
Awesome. Thanks, Metin. Thanks, Aaron. Thanks to all the presenters, everyone who tuned in. Next time, if you found this valuable, bring or invite a friend or a colleague. Help grow the network, grow the ecosystem. I'm going to take off. You all got things to do as well. Thanks. Cheers and juice from us here at Forward. Thanks, guys.
Thank you.
Thank you.
Thank you.
Thank you.
Take care.
Thank you.
Bye-bye.